Hi, friends. My name is Daniel Zia. I'm the founder and CEO of the Zia Group here with eXp Realty in Santa Barbara, Montecito, and the Central Coast of California. And I'm here as part of our commitment to be your real estate economist of choice. And I'm going to deliver the August 2022 real estate market update for specifically the South Santa Barbara County real estate market. So we're going to look at everything from condos, single family homes, and the luxury market of South Santa Barbara County, and the luxury being primarily the areas of Hope Branch and Montecito. So first, let's just talk about what the market's doing. We have been in a very different real estate market for a sustained, let's call it, last 4 months. Have felt very different than the previous years of 2020 and 2021, essentially post-COVID. Now, it's not all doom and gloom like the national media has hyped it up to be. We've seen a shift in our market where buyers have more leverage than they've had in the last couple of years, but it's by no means a buyer's market. It is still very much a seller's market. And our real estate market in the Santa Barbara area specifically has been operating very differently than some other markets, actually even close by in LA or Orange County. Even other higher end California markets have seen primarily a drastically increased level of inventory that we have not seen here in Santa Barbara. So while it's true, we've seen a slowdown of sales activity, and I'll dive into the stats in just a minute. What we haven't seen is a corresponding increase in inventory levels. We're actually in some of the historically lowest inventory levels in our history. Definitely the lowest new active inventory in the last 5 years. That's what we're encountering right now. So that's creating this interesting dynamic in the market where it's not all doom and gloom if you are a seller. And if you're a buyer, you do have a little bit more leverage, and not everything is selling right away, but it's more of this balanced and slightly seller's market than a buyer's market. So let's dive in here. The big question I think on people's minds are real estate prices or home prices, are they going up or down in the South Santa Barbara County area? The reality is the statistics are a little bit, I don't know. They're a little bit confusing. And I think if you listen to a lot of real estate agents that are just parroting the statistics that, for example, the title companies, they provide title data that shows whether or not, essentially what's happened to the median or the average sales price. So you may hear one agent or one real estate team talk about one statistic and another agent or team talk about a different statistic. I actually go into direct the multiple listing service data. I look at that tax and title record data, and then our team tracks the real estate market in kind of a proprietary way, literally looking week by week into the market statistics. And then I reconcile all three of those locations and try to come up with conclusions. So what I'm giving you hopefully is a far more holistic and in-depth analysis and approach than other agents or teams out there. So if you see any conflict in the messaging, just be aware of, we're not just giving you the surface level quick answer that's put out to us by the title company. We're saying what's causing that data, and that data, because all statistics are retroactive, when did that actually change? When did that occur? And has it actually even caught up to us, where a lot of what we're seeing in the statistics today are actually changes that happened 2 months ago, and we're just now seeing them. So what are the changes that are happening today that we may not see in the market statistics as a reflection of that for another month or 2 months or 3 months in the future? So going specifically into the median sales price, which I've always viewed as a stronger determination of true appreciation or depreciation in a declining market, we have seen, if you look at the year-to-date market statistics over last year to date, so you look at January to the end of July, it's the August real estate report, but it's going over statistics through the end of July. When you look at that period of time to the same period of time in July, of 2021, we have seen an increase in median sales price of 14%. So that would lead you to believe that the market has appreciated the last 12 months. What's interesting is that when you look at just July 2022 over July 2021, we actually saw a median sales price decrease of single family homes by 1%. So the condo market did better than the single family home market, but the single family home market in July, actually on paper, the median sales price went down 1% July year over year, month of July 2022 over 2021. So here's what that is. That's a fairly small sample size We actually, in July, we saw half the number of sales this year in July 2022 as last year of July of 2021. So it's a fairly small sample size. We don't know if that's necessarily a trend. But it's my belief is what happened is the end of 2021, we saw still really great appreciation rates. We were seeing the market appreciate at probably still 1.5% to 2% per month. Then the beginning of 2022 hit, and I think we still were seeing some appreciation. And I think really what's happened is in the last 4 months, we've seen the market slow down significantly, and the buyer hesitation, a lot of ways pushed by national media and buyer perception of what the market's going to do. That's where we've seen that hesitation put, some downward pressure on prices. So does that mean that actually home values went down the last 4 months? I don't know, but what I think is if I were to take a listing today and sell it on the market today, it is my belief that that listing would sell for less than it would have 4 or 5 months ago because the buyer confidence was higher 4 or 5 months ago, and the buyer's access to capital was greater 4 or 5 months ago because the interest rates were lower. Today's interest rates are in the mid fours. 4 or 5 months ago, they were substantially lower, and their buying power was greater as a result, so they could afford to pay that extra $50,000 or $100,000 in our market, which was generating higher sales prices, more offers, etc. But I don't think the statistics truly show a declining real estate market now, and I don't know if we're going to see that as a long-term trend, or it's more just been kind of a blip in the market. And when we look at the total view at the end of the year of what the market's done, appreciate or depreciate, I still think that we're going to have seen appreciation in 2022 as a year as a whole, but we just don't know what's going to happen in the next few months. It's too soon to tell. Right now, the median sales price is $2.2 million in our area for a single family home. I think a good example of that is your typical 3-bedroom home in San Roque right now. One of our popular neighborhoods is selling for around $2.2 million. In the affluent areas of Hope Ranch and Montecito, there's quite a bit more higher end sales activity. As an example of that, in July, there were 8 sales above $5 million in our area, and the majority of those were in Hope Ranch and Montecito. And the highest sale actually was in Hope Ranch, which is interesting. It was 4045 Cuervo Avenue for $18.5 million. And here's the thing, friends, it was really interesting because that property was not fully dialed in. It needed a cosmetic remodel. It had a great location and really dramatic ocean views, and it didn't have the stigma of a high fire risk up in the foothills. So it had kind of a unique location, but it really needed a cosmetic remodel through the whole property inside and out. And someone purchased it for $18.5 million as their starting price, and they're going to put in, I would imagine, at least $4 or $5 million to cosmetically finish it out. So they're going to be into it 22-23 million. My guess would be before they really get a product, kind of an end product. So kind of interesting there. Going back to home prices, one of the biggest predictors of home prices is a metric that we call the absorption rate. So the absorption rate is when you look at the number of weeks or months of inventory at the pace that homes are selling. How long would it take if no new homes come on the market for all available inventory or homes for sale would sell? And so the interesting thing is we have seen month over month a 34% increase in the absorption rate. And we're now right in the range of just a hair above 1.5 months of inventory. So, I mean, it's not a huge increase. It's sizable because we were so low, but we went from 1 1/3 months of inventory to, I think it's 1.54 months of inventory. Now, on the luxury market, it is taking a little bit longer, and we have a bit more selection on the luxury market. We saw a greater increase there of 55% on the absorption rate. And so we now have 2.5 months of inventory, or an absorption rate of 2.5 months on the luxury side of the market. Now, I think one of the biggest changes here, and one of the interesting factors of whether the market is going up and down, is looking at price reductions. You might have even said this, or you might have heard this. Hey, we have a lot more price reductions that we're seeing. I've been watching homes on Zillow, and I'm seeing price reduction. So the reality is we are absolutely seeing more price reductions. That is absolutely true. In fact, we've seen on average the last number of weeks, we've seen twice as many price reductions as last year. So we really have sellers doing the prudent thing and adjusting to buyers' confidence level today. Some of them are still coming on high, hoping it was the market of 4 or 5 months ago, and then they're realizing that it's not, and they're adjusting down to the buyer's expectation. But they're still selling it, so that's the good news. Here's where we're seeing that difference. Last year at this time, we were actually seeing on average, as a market whole, the properties were selling for 2% above the asking price, at 102% the original list price, which is just absolutely wild. We've never really seen that in the history of the Santa Barbara real estate market. And most times, properties are selling for 5 to 9% below their original asking price, right? So a strong seller's market, they might be selling 4 or 5% on average below the asking price. A strong seller's market, a strong buyer's market, maybe it's selling 7, 8, 9% below their original asking price. So here's the interesting fact. A year ago, we went from 102% of the original asking price to now properties are selling on average for 7% below the original listing price and 3% below the last list price. So what that means is if you're shopping online, as a general rule, if a home is listed for $2 million, generally it's going to sell for 3% below that price on average. But here is where the agent or the team that you work with really makes a huge factor in your successful outcome. So there are some properties that are going to still sell for 5% above the asking price. There are some properties that are going to sell for a hair above the asking price, and there's going to be some properties that sell for 10% below the asking price. Your agent is going to be the one that's going to advise you on how aggressive you need to beat out the other competition that's circling that listing, because some sellers are really adjusting their expectations and pricing very well, and properties are selling quickly. Other sellers are stretching too high and not adjusting quick enough, or they'll only sell at a certain price and their homes aren't selling as quickly. I'll give you an example of that. We brought on three homes on the market, all on the same week. So the exact same moment in time in our real estate market. One home in Carpinteria, one home in Santa Barbara, one home in Goleta. These three listings, one property had 7 offers and went way above the asking price. I mean, way above the asking price. I think it was like 15% above the asking price. Another home in Goleta had multiple offers and it went a hair above the asking price. And then a third home in Carpinteria didn't have any offers, but we told the seller to not be discouraged. We were going to keep our marketing plan in place, make some adjustments, and go find a buyer that would still pay them a premium price. And we are now in escrow a few weeks later above the asking price. So who you work with matters more now than it has ever mattered, because the real estate market has shifted. We heard a lot of this a year or two ago that, hey, I'm just going to have my friend list the property. The properties sell themselves these days. And while they still had what they thought was good sales experience, if they would have hired the best in the business or one of the best in the business, they probably would have had a much better sales experience and netted far more from the sale. But so this is a time where it's really painful to make those decisions and hire a subpar agent, an inexperienced agent, or your friend that just got their license. So moving on here, let's talk about home sales. We've had 10 straight weeks of decreased sales activity. That means fewer homes have gone into escrow every week in the last 10 weeks. Pretty wild. We also are seeing, let's see if there's anything else relevant there. I think, as far as sales activity, it might be worth noting that that the $1.2 to $2 million range, what we saw is below that median sales price, is still the most active range on the market. So that's viewed as the affordable market now. And that's a lot of first-time home buyers trying to get in under a $2 million price break, which for our area, I mean, that's the big first step, which is challenging for a lot of buyers right now. As far as home sale velocity, how long does it take to sell a home? We're looking about 26 days on average. And again, part of that is the absorption rate is rising. It's rising, and part of that is it's taking longer for them to sell. So even though there's fewer homes coming on the real estate market right now for sale, that inventory level is so constrained. We do have less buyer demand, and that's what's vying right now. Is it the buyer demand that's less than the slower number of listings coming on the market and the lack of selection? So the buyers that are still out there shopping, they are making strategic compromises to get into properties today. And one of those factors is it's still predicted that interest rates are supposed to increase by the end of the year, possibly even into the 6s and 7% range. And so a lot of buyers are still hustling to get in now, and they're still a believer in long-term home ownership, and they want to start getting some of those tax advantages and other factors. Our inventory level, like I mentioned, is the lowest it's been in the last 5 years. In fact, if you wanted to put it in context, we've had 200 fewer homes come on the market this year than any year in the last 5 years. 200 fewer homes, nearly 200 fewer homes. It's been wild. So we still got talks of recessions. I know things are a little bit more optimistic with the latest inflation numbers leveling off a little bit, and the stock market recovering a little bit. And so it'll be interesting to see in this recession, are we like 4 of the last 6 recessions where home prices actually increased, or are we like 1/3 of the recessions where we see some home price softening and more adjustment in the market? We'll wait to be seen. The last question that's on people's minds right now is, what's the alternative? If you're a home buyer in Santa Barbara and you're asking yourself the question, do I wait to see what happens in the market? Maybe prices come down and I can buy it at a better rate. Maybe interest rates come down, even though everyone's saying interest rates are coming up. The challenge is, what are your other options right now? The rental market is nuts. You've got vastly increased rental prices and a real limited selection of inventory in the rental market. So for those buyers that are choosing to wait on the sidelines, it's expensive right now. They're paying more, and they don't have as exciting of a rental selection right now. So there you have it. Tune in next month. We'll keep you updated play by play. Again, we're tracking the market literally week by week, and it is not a one-size-fits-all. I'm a true believer. Every market has opportunity. And in fact, most people build their wealth in a down real estate market. So if we do see prices declining, there is opportunity there. So go ahead and reach out to your preferred Zia Group Realtor partner or to me. I'm happy to walk you through what we're seeing week by week and help you put together a strategic plan to take advantage of this market for whatever matches your wealth building and your family's needs. Until then, have a great rest of your August.